very, very insightful and engaging conversation with the management of TCS. They're saying that the order pipeline is quite strong, although decision-making is slow in certain markets, but they're satisfied with this quarter's performance. Dipan Mehta, director at Elixir Equities, joins in now. Dipan, I can't put my finger on whether the management commentary is optimistic or cautious. You tell me. How have you looked at the numbers? Numbers are at least not as bad as what the street feared. And how are you positioned on the stock now?
Good morning, Sonia, and thanks for having me on your show. I think the numbers are excellent. To get a 19% type of a top-line growth rate in rupee terms is quite exceptional given the challenging times. And I think now what is happening is that the growth in revenues is matching the increase in the employee cost. And at some point of time, the growth in revenues will exceed the employee and other costs which the company bears. And that will mean positive operating leverage for the company. So, the growth slows down to say 13, 14, 15% or so, but the expenses will be lower and they'll start getting benefit of the operating leverage. And that's how the net profit momentum will continue. Given the way the stock price has corrected and these numbers, and I would say cautiously optimistic commentary from the management, we are quite positive on TCS. And I don't know how the stock will trade today because it's difficult to make a call. But maybe I think the worst of the correction of the IT stocks may be behind us if other companies also follow suit and declare similar type of results.
All right. Hi, Dipan. Morning. So you're fairly impressed with these numbers. I just had wanted your opinion on this. The promoter entity out of this dividend, they'll be getting close to 20,000 crores odd. I'm just wondering, where will they deploy it? Will there be some of the listed or the unlisted companies that they'll pull out this money in? Because it's a large sum of money we're talking about, $2.5 billion. What's your sense in some of the other group companies, like a Tata Motors? Sonia has been telling us about some news flow that's coming in there. Your sense on it? And, I think in the next couple of weeks or so, maybe we could hear something with regard to deployment of this money. Just a guess, because it's a large sum. Go ahead, Dipan.
Yeah, well, Ajay, good morning. I can think of two ventures which require this money. One is, of course, the aviation. There's going to be a massive investment over there from the Tata side. And secondly, the digital businesses, all the new apps which they have launched, and there's intense competition over there as well to get the e-commerce business going. So these are the two ventures I think they will invest in very heavily. I'm not certain that money is required by Tata Motors or Tata Steel or any of the large listed companies of the Tata Group. But in any case, I think it's great news for Tata Sons that they're getting this kind of an income in at a time when they want to rev up their investments in a whole host of new age digital businesses and aviation as well.
Okay, guys, I just was looking at it. I think Tata Motors, they're going to be delisting that ADS, right? So for those who don't take it, there will be a bit of an overhang out there because as of now, there is 4.5 to 5% of that stake in the listed entity. So let's see how that plays out. But just an observation out there because I think post-January 2023, that ADS will not be traded as well.
All right. We'll keep eye on that one as well. Dipan, hi, good morning. Just a quick word on the market itself. Do you sense this could be the beginning of a bit of a pre-budget kind of a move, what we saw yesterday? Or do you think unlikely? What's your sense?
Good morning, Prashant. I think it's going to be all about earnings. And yesterday, the tide turned for IT stocks on the expectation of good TCS numbers. And I hope the street takes these numbers well. And if that is the situation, then I think it will be the earnings which will be the main catalyst for the markets to, having turned around to build on the gains which we have seen for the past 2-3 trading sessions or so, and then take up from there. Budget, I think, is important. But by and large, I think budgets have become less and less of a market moving event. There's a one-day, single day or two volatility. But end of the day, I think the way the budgets are designed these days, there's not much in terms of what the street can take out of it. Sector specific anyway is part of GST. And only thing the street looks forward to is if there are any changes on the direct taxes side. And I hope they don't tinker with the capital gain structure of equities. I think if there's no tinkering over there, nothing adverse comes to, I think markets will take budget with both hands.
Okay. Just coming back to that, discussion that we were having on the Tata Group, on Tata Motors particularly, what are your thoughts, Dipan? The numbers are not looking bad at all. In fact, it's a good growth that we're seeing, a 15% growth year-on-year in JLR wholesale numbers. Now the chip supply issue has also eased. Certain markets are picking up, except China. Is this a good time to be buying Tata Motors?
No, Sonia, we start to avoid Tata Motors. Within the auto space, there are better choices. M&M, Maruti, Eicher Motors. The problem with Tata Motors is a very complex company and they operate in very different markets and it's all about JLR. And while China starts to do well, they'll have problems in UK and Europe, and then USA is going into a minor recession or so. So sales get impacted over there as well. So it's very complicated to get a handle on Tata Motors earnings. And there's not high degree of visibility or visibility of growth in earnings. And keeping all of that in mind and considering the kind of trend which is there more and more towards EVs globally, I think Tata Motors is best avoidable at this point of time. We like M&M, we like Maruti, Eicher Motors. They're sitting on good order booking. Margins are stabilized over there. Great deal of visibility because of the kind of popular models which they have launched and the response which they have got to those models. And overall, I think there's a increasing consumer spending taking place, and that I think benefits auto companies as well. So, as I said, there are better choices per se.
Oh, right. There are better choices. Got that. Dipan, we need to take a short break, so just keep it with the channel. We'll come back in just moments from now. Lots more to talk about. We have the TCS management, the rest of the top brass, Rajesh Gopinathan, the MD and CEO, and Samir Seksaria, the CFO at Tata Consultancy, will be with us to declare their Q3 numbers. Stay tuned.